right, welcome back, YouTube. So in this video, we're going to talk about the next zones for Doge, where we need to close today, and we're going to take a look at shorts and kind of get an idea of where we stand overall. So with Dogecoin, we pretty much broke over 10 cent last night. We set a new yearly high, so that is really exciting. And if you watched my last video, I talked about the importance of us breaking into this zone here and why we need it to kind of really just get over into the 10 cent range as far as for building out a new floor and giving us really some strength at these new higher levels here, so that you're not just having some extreme volatility and just doing a slingshot all over the place. So where we are now, we're at roughly 985, which is relatively close to 10. We had went almost to a little over halfway to 11 cent, around like 10.6, and we got some pushback, and so now we're here. So what we're looking for now is to close in this range. When we start closing in this range, once you break through, which is technically the toughest part, is being able to break into the range. So we're already, I'll say, halfway. The battle's halfway won when you're able to break into the range. So the next step would be to close in this range, so that you're not trying to get pushed in. I've made a post on Twitter last night, and if you've been following the channel, we know we've been talking about it. The shorts are going to come in and start doing some pushback once you get into double digits. And that is exactly what happened. We saw a 67% increase last night, which is not a lot because the shorts were basically non-existent before. So when you hear the number 67%, don't think of that as like, oh my God, it's like millions and millions of dollars coming in to short the coin. That's not necessarily true as of yet. It's just saying that they basically went from nothing to a 67% increase. So they are becoming active as we break into these zones. And really the reason for that is, if you have a coin that you don't like, and you'll see it in Bitcoin as well, you'll see shorts start to pile in as they're trying to look for an area for a pullback, and there will be pullbacks. That's normal. Nothing goes straight up. So when you have an asset that just runs unchecked, what you're going to have is people that are waiting and for a pullback, or who are waiting for the market to get active again. That FOMO is going to start to build up, right? The higher it goes, the more intense that FOMO is going to be. So if this runs to, let's say, 15 cent right now, that FOMO is going to be a lot more intense versus the current levels that we're at now. And shorts know this. Momentum means a lot in the stock market. So what they don't want to put themselves in a position is, the bigger the snowball gets, right, the harder it's going to be for them to try and slow down that momentum. So once you get into 10 cent, they'll start to become active, so that they can kind of have some shorts at the lower level, just in case there is an explosion, so they're not completely exposed at those higher levels. Because if you look, let's take a look here. So if you take a look, and let's say shorts would have come in here, right? So because we were down around like 596 right here back in October, and let's say shorts would have said, you know what, it's risen over a penny, it's at 7 cent. Let's start shorting right now. They would have gotten wrecked, literally just destroyed, if they would have came in that early. So what they're looking for is, they're looking for a little breaks in momentum, so they can kind of jump in and start taking position. So when you start to see like some hesitating, like around that 10 cent mark, you have traders taking profits. You have people who got in at around like 5-6 cent range, and they're up 50% plus right now. They're thinking about taking profits. So they're looking for those little cracks in the fabric so that they can get in and not be completely exposed, because they don't want to be on the wrong end of this and saying, okay, they don't want to be in a position where it's like, oh, let's short now, and then it runs off. They're looking for like a run to pretty much take a break, right? You can think of it as running literally. When you run literally, you're going to have a period where you slow down and you do like a stride, or you catch your breath. And that's technically where they like to short. They like to short the run when it starts to catch its breath, or when you have like these really big candles here. This is where they like to come in at. They don't want to do this here with we were talking about the stairway to heaven. They don't want to do that, because you don't know where that explosion is going to be. And if they do it here, again, even if they would have waited until we were at the 8 cent range and they said we're going to short, they'd be panicked right now, because they'd be getting destroyed. So Now, and even now, they're being cautious, which lets me know that they kind of know that we have a lot more potential to the upside, because the shorts, they're not, we're going to take a look at it in a moment at the camera, but they're not piling in like they did when they had the Elon news. So they believe that this is a turn. This is kind of giving evidence that the market is kind of shifting, because they don't believe that this is just a fad, or that it's just going to be like a quick pump and dump, because I can tell by like their level of aggression. So that's something we'll keep monitoring. So again, another one of my rants, but I wanted to kind of explain that a little better. So what we're looking at is obviously to close in here, and this opens up the window to the next levels, right? So this next level up here is around like 1113, and then we have 1211, and obviously this opens up to around the 1596 range up here. But this is obviously the most probable area that you'll have a consolidation. I imagine shorts will be much higher in this area. It's a much wider zone. This is very difficult to break through. So technically you'll have this run up here, and you'll have this, like, normally it's great pushback, and you'll have like some consolidation. And technically what you want to do in this zone is build out a new floor. That's technically what you want to do. You really want to, if you want to have a less volatile climb, that's technically what you want to do. You don't want to have these enormous candles where you just take off from like 8 cent and shoot up here to 12 or something like that. We were talking about that's how you get like the gap downs. When you go through these zones, you want to kind of build out a floor here, then ascend. Build out a floor here and ascend. Build out a floor and ascend. And that way, if there is massive shorts, negative news, and this goes for stocks as well, negative news, all that kind of good stuff, you're able to kind of pinpoint where the rejections, where the support, where buyers are going to come back into the market on the way down. Because if you don't, kind of like what we were talking about yesterday, you're going to have that, just like you have the stairway to heaven or the rocket ship to heaven, you're going to have a slide to hell. So you want to just kind of build out these floors as you go along. So this is why I'm not opposed to where we are now, and just saying that, hey, we can kind of close in this zone here, and I wouldn't even be opposed to us kind of trending sideways or having a gradual ascend, something like what we did back down here between like the mid 7s and around 8 cent. These very small strides here on the day, I love it. I love it. And if we can do that here, just build out that that floor and have all those entry levels, that'll be perfect for building strength on this movement. So let's take a look here at shorts before I get into BTC. Yeah, the green on the day right now, we're looking at about, I think, what is this, 18% up. So green, but this is what I meant by, in the grand scheme of things, this is not a massive amount of shorts entering the market, right? So this is some of the price action that you were seeing back in October, September, August. These are like these really huge run-ups and stuff like that. This is nothing compared to where we are now. And so just kind of keep that in mind. We haven't seen a massive explosion in shorts yet. I expect some of this activity probably at 12 cent or higher. And obviously, and don't forget that the main thing for Doge is obviously still going to be building out utility. I know we have the Doge One catalyst, obviously adding strength and credibility to the coin. But the biggest thing is obviously going to be building out utility. And once utility is built out in the coin, the shorts and stuff like that, it's going to matter a lot less, because it's going to be a lot more difficult to spook the current holders, because the current holders aren't necessarily going to be investors looking at charts. They're going to be businesses and stuff like that are actually doing transactions with the coin. And when you're doing transactions with the coin, it's not necessarily just again, people just sitting looking at a chart. So the subtle movements and stuff like that is not going to spook them to dump or bad news and stuff like that. It's not going to be as easily influenced on the short term data. So I'm just going to keep that in mind for the long term. Let's take a look here at Bitcoin. Yep, Bitcoin used that highway to heaven here. It bounced off of that 14, and it's just rocketing off into space. What we even without looking, I know the biggest thing, even from a psychological approach, will obviously be breaking through the 45 range. We have the ETF catalyst. It's possible that we can possibly see a break of over 50,000 probably before the end of the year, and maybe have some threatening attempts to test an all-time high before the halving. And if that does, this will, I don't want to say guarantee, but it's extremely probable that we're going to see this go over $100,000 this bull cycle if we have that retest at around, if we have the attempt at an all-time high again before the Bitcoin halving. I'm going to take a look here at Doge again, make sure. Do you have any? Yeah, so this is that golden cross that we looked at really paid off. This is what I was telling you about, that 72 and the 200, much stronger indicator than some of those lower moving averages. So this is a very, very good indicator here. So the next one, which would just probably send Doge to like an all-time high or something like that, is having, or at least well into 20, 30 cent, will obviously be the 200 crossing some of these other indicators. We'll have to bring in some smaller indicators, maybe like 100-day or something, to kind of get an idea. You can probably catch some of those, not as explosive as this one, but some of those upticks. But yeah, right now we're curving the 14. This is beautiful. The 72 is curving. And the crazy thing is, if you take a look here, because you've been in a descent pretty much since May, so most of the year, we have the 200-day bending. We're starting that upward tick here from the 200-day. That's how strong this movement is. So this now is very, very important here. So what we can have here, if we have like a consolidation up here and we consolidate at a new level, we can start looking at the 72 again and stuff like that, to seeing if we're going to get another cross. But this here is a huge indicator here. So this is how we're kind of able to call this, weeks ago, for those of you that follow the channel. So anyway, those are the next levels. We're looking at 11, 12, and then that wide zone opening up a run to around 15 cent for Dogecoin. Obviously, we need to close in this zone here. I'll say anywhere above 956 is good. So even if we close below 10 today, it's still good, just as long as we're 9.5 or above. If we close below it, if they are able to get us down right below it into this zone, again, it's not the end of the world. You're strengthening that floor here. And we do have this zone here to play with, so that if we need to grab liquidity, because remember, we were in this zone before at 869, and we went down and grabbed some liquidity and continued the trend here. We really set a higher high and a higher trend, and was able to kind of regain that momentum and run back up through the zone. So not the end of the world. That's just an ideal situation. We'll obviously have to kind of see how this plays out and where these candles close. So obviously I will keep you guys posted. If you appreciate the no fluff and the technical analysis and getting to the information, please like this video and subscribe to the channel. That is what we believe in heavily here. Let me know your thoughts on Doge and this movement coming up. And I will see you guys in the next video.